Good morning, Jags. This is Fahad. Today is Wednesday, November 11th. Let's get started. This is Nasdaq chart in front of you. As of right now, Nasdaq futures are higher by almost 1.4%, while Russell 2000 futures are higher by half of that, or about less than half of that, or by 0.6%. So you can see that at least looking at the futures this morning, we're seeing a little bit movement back into NASDAQ, N's over R's or N over R. And so for the last 2 days, we have seen Russell 2000 index outperform materially. In fact, when you add the total outperformance over the 2 days period, it adds up to about 8 percentage point of outperformance over NASDAQ. But as I said yesterday in the chat room as well, and also in webinar, that I think this is getting a bit too extended in the very, very short term. So now looking at the futures this morning, at least for now, NASDAQ seems to be leading the charge, while Russell is also higher, but not as much. So what does this mean? This means that a lot of the tech stocks, really good companies that have been really benefiting during this COVID environment, that have taken a significant amount of beating lately, I expect them to run today. We'll see exactly whether there's going to be any kind of fading action in the middle of the day or whatnot, but at least now I would expect some gap higher. For example, in Zoom video, I expect this stock to get back to above $400 per share. And similarly, you're going to see that in Netflix. You're going to see that in many, many other names, tech stocks that have taken significant amount of beating in the last 2 days. So just a big message over here, and let's see how the day progresses. Now, staying with that theme, CrowdStrike. I would like to take a look at this real quick. I believe this stock is presenting another buying opportunity right here. So first of all, purely from a technical standpoint, here is a major support level right at $120. This was previously resistance, as you can see back in July, and then again in August. The stock tried multiple times, and then the earnings came out, which was back in September, and the stock spiked sharply with a heavy volume breakout through that $120. Once you break out through a key resistance on heavy volume, then that support becomes support. And so that's exactly what happened, as the stock subsequently retraced on light volume and completed the retest of that $120 support. Subsequently did that again, also in light volume in late October. And in the recent market meltdown, particularly NASDAQ, it is doing that once again. Yesterday was a bit of a hammer reversal candle as the stock bounced off from this $120 support. So I think this is a very easy reference point here. One wants to get long with a hard stop at $120 per share. This morning, this stock is catching an analyst upgrade, which was covered in today's first read as well. If you look at today's first read, you will see that Baird, the analyst from Baird right here, small comment, Baird analyst Jonathan Rucaver is upgrading CrowdStrike to outperform with a price target now at $155 per share. And just a simple note that the analyst upgrade is a result of his belief that the company's strong fundamental opportunity and its favorable competitive positioning and management ability to execute. But I would like to add more color to this because it's important to bring up all of our discussions that we've had on CrowdStrike going back in the last several months. It's one after another has been a bullish view that we have been establishing on this name all the way back since Jay wrote about this stock first time in December 29, 2019. This was all before COVID happened. That's when the bullish view was presented in the week in research. Since then, every couple months or so, we have come back to this name, constantly getting even more bullish than we were previously. Most important thing that you need to keep in mind is this big color that we provided on September 21st, that back then we saw a pickup in call option activity as well. And Needham at that time was raising price target all the way from $120 to $170 per share. After catching a strong tailwind post-Zoom sprint, Crowd was up 20% over the last week and 45% over the last quarter compared to 16% growth in the S&P 500. In our opinion, Crowd topped any reasonable investor hopes with revenue growth of 84%, well ahead of our street estimate averaging 72%, with a subscription revenue of $184 million, up 89%. A key ARR metric climbed by 87% versus street at 75. And further, management offers strong guidance for the upcoming quarter and full fiscal year guidance, strongly above the street estimate. I talked about this too on June 11th and several other times in the chat room, that this was one of the most fabulous quarters I've seen from the company when it reported over here last time. So there's a very easy entry here with a hard stop at 120, and there's a stock having pulled back from 143 on Friday, last Friday, now at 123, 20 points lower. I think this will bounce back to 140 and possibly all the way to new 52-week high. So that is CrowdStrike. And then the second stock that I want to quickly discuss is One Life Health, ONEM. This is a former Jaguar top pick from the third quarter outlook. As you can see, this is the third quarter 2020 outlook, in which we recommended buying common stock and sort of trying to play around with options, which were very, very wide bid and ask spreads. We suggested let's just buy common stock at $38.35 or less. This was in July. Naturally, our timing was not all that great at the time, because the stock subsequently struggled, came down a little bit, built a large basing formation around $30. You can see all the VOP congestion level here, and then recently started to move higher. This morning, this stock is gapping higher by about 10% or 8 to 10% in pre-market after the earnings came out. Closed at $33 per share. It's going to open at $35.50. Go back to the daily scale, that means it's now emerging from this large base, and I think this is just the beginning. I expect this to gradually march higher with higher highs and higher lows all the way back to new 52-week high. So I think you're going to see this thing run towards 45 plus. Not today, but over course of next couple months potentially, or maybe next 1 to 2 quarters. So I'm looking all the way rally back to new 52-week high. This quarter was absolutely fabulous. This was also covered in today's first read, but take a look at this. The company reported revenues of $101 million versus $86 million estimate. Revenues were up, let me see, revenues were up 46% year over year. The EBITDA, the profitability of the company, first time turned back to positive, with a positive EBITDA of 3.5 million versus a loss that everybody was expecting. And the total membership count increased by 29% year over year to 511,000. The next quarter guidance, Q4 guidance, was raised to a midpoint of about 107 million versus 90 million street estimate. And similarly, they now expect that they're going to see similar kind of year-over-year growth rate of at least 28% in the fourth quarter in the membership count, and a sequential improvement of about 5 to 6% from Q3 to Q4, resulting in total ending membership count between 530,000 and 580,000. And the full year guidance was also raised. Fantastic quarter. To be honest, I've not had a chance yet to actually dive into the actual earnings transcript to see the management commentary, to see what they have to say about 2021, kind of competitive landscape, how big is the opportunity, all of this. So I will review all of that later once I get a chance to pull the earnings transcript and look at the conference call notes and all this. But the important thing is, this is a former Jaguar topic that is starting to emerge from this base. Look for this rally to continue all the way to new 52-week high. And that's it from me. Jay?
Morning, Vod. So first off, I will have a homepage write-up later today on Cryoport, ticker CYRX. We've gotten a couple questions on this from clients, essentially asking for an update. Company reported earnings last week, so I will have some commentary to share later today.
Awesome. Look at this beautiful chart, by the way.
Yep.
Fantastic breakout on heavy volume in this one too after the earnings came out. So it looks like now it's gunning for new 52-week high. I've made quite a bit of money on this one too ever since you discussed this first time. So I'm sure that that's why that you have a lot of clients' interest in the name. Yep. So looking forward to it.
And then secondly, I want to talk about Cornet Digital, ticker KRNT. This company reported earnings after the close yesterday. And this is the digital printing solutions company. It was a strong quarter, strong outlook, beat on both the top and bottom line. Total revenue was up 21% year over year and then 53% sequentially. Sales were strong across the board, driven by its Atlas systems, Vulcan Plus, Presto system. Management also said that they were pleased to announce that because of the position that they were in, to increase the outlook they provided for the second half of the year from low double-digit revenue growth to 25% year-over-year revenue growth. Looking at its customer base, in Q3, they closed an important deal with a leading Italian digital fulfillment partner who caters to some of the largest fashion brands in the world, such as Versace. Back in August, they announced an acquisition of Custom Gateway, which was a cloud-based software platform. This acquisition seems to be going very well. They've generated over 80 new opportunities with them. And then another point on the customer base, when we last brought this stock up in conversations back on September 22nd, one of the items that we highlighted was that Amazon, who most people will know as their top customer, they essentially placed a sort of a $400 million purchase order, really. 250 million of that for existing products and 150 million for new products. And the reason why I'm just bringing all of this up is because, you know, Amazon makes up over 10% of the company's total revenue. They are one of the largest customers for KRNT. What we found out from the conference call last night was that there are two other companies who now make up over 10% of revenue. And this is the first time in the company's history that they've had this happen. Unfortunately, we don't know who those other two are right now. They couldn't go into detail, but it'll be interesting to find out down the road who those are. And then the last point I want to make in terms of the outlook, like I said, it was a strong outlook. The company essentially saying that they have visibility into the first half of 2021. In the Q&A session, when asked about it, they basically said, you know, it's going to be a very strong peak season that's coming up. One thing that they're hearing from their customers is that they believe that this peak season will not end in December. Rather, it's going to take, it's going to go into January, into February, because these customers, they won't be able to deliver on time just because of the huge demand that they're seeing because of the huge backlog in orders. So a strong outlook for the company, and it should be interesting to see how all of this unfolds.
Yeah, interesting. Not a lot of volume in pre-market, but I saw a few prints at $72 per share, and the stock closed at 68. So who knows? This thing will probably power higher and break out from this month-long consolidation. This is the third time we are discussing this, by the way, in Jaguar Media. KRNT Digital. So the last time we discussed was on September 22nd, and before that on August 4th. And I remember having this conversation openly with you at that time too, because that's exactly what we discussed. That KRNT sets up for breakout after receiving large $400 million contract from Amazon that should materially boost revenue growth. It seems to me that that's starting to materialize now, but that's not the only story anymore, because now we know there's a few other large customers that we do not know yet that are also in play here. So interesting update, very strong, powerful, steady chart. Not much, you didn't even respond much to the market sell-off or the Nasdaq sell-off at all. So it remains in a strong uptrend, and I think this thing is going to break out again through $72 per share. Should be interesting.
Agreed.
All right, great stuff. Chronicle.
Morning, Fahad. Couple of things this morning. Both are to do with Chinese stocks. First off, if we look at first read, on top of all this scrutiny over Alibaba and Chinese tech companies, China's banking regulator is now targeting monopolistic fintech companies. And they're looking to possibly introduce regulations that will hold these fintech companies to the same standards as banks. So if anyone's long stocks like OCFT or FUTU, this is something to be aware of in the immediate term, even though it doesn't directly affect them. I think over the long term, this is noise. You know, Chinese consumption and services growth isn't going away, and China's market is oligopolistic by nature with high barriers to entry. So it's not as if there's anywhere else consumers can go to for each service. But Fahad, I think it's kind of funny that prior to the election, the main overhang on Chinese stocks was the Trump administration and their stance against TikTok, WeChat, and so on. But then now it seems like the Chinese government has taken over the baton, and now they're the new overhang with their step up of regulation over Ant Group a couple of weeks ago. And then we had antitrust scrutiny over Chinese internet stocks last week, and then now fintech. So these Chinese tech companies, it's almost like they just can't catch a break currently. And I think it's funny in the sense that everyone was focusing on Trump administration's hawkishness, and then and practically no one was expecting Chinese regulators to become the new headwind. But long term, I don't see how the government can keep a lid on the rapid growth of these big tech companies without first opening up barriers to entry, which they're not going to because this current Chinese leadership has never seen anything they didn't want to regulate. But they can't have it both ways. So that's my first
Yeah.
item.
Yeah, so I just want to add my quick color on this. I 100% agree. This is noise. This is not news. This is noise. But I just wanted to like to add that while this noise is playing out, right? And understand if you put it on a timeline, the very first news that came out from China was when Alibaba sold off sharply was on November 3rd. That was when we found out that Shanghai has canceled the listing for Ant Group IPO, and the stock sold off. And I think that was the first element of this. And now we know that the full story is out, which is that this antitrust regulation is coming out from China that's going to go after all of them. But as I said, this is all noise because that's exactly how it plays out usually in America as well, where it creates a lot of noise. We saw this with Google as well. And also European Union has gone after previously against Google and Amazon, and nothing changes at the end of the day. So I think all the news that was supposed to come out regarding all of this is now fully baked into this stock in Alibaba, which has come down from 319 to 266 currently. And I was up early at 4:30 this morning, and I looked at my screen at 5 o'clock in the morning, and I saw Alibaba was gapping down sharply all the way to 256, but you can see it has made a steady recovery, and now actually it's going to open up in green. It's now above, it's now higher than where it closed yesterday. So market is also speaking. Second thing I will just quickly add is that this noise is overshadowing what is this beautiful singles day sales, and we cannot underscore that. During this period, the company posted GMV surpassed 56.3 billion in the singles day, and the order rate hit a record 580,000 orders per second. 583,000 orders per second versus 38.4 GMV last year. So this is what, 40% growth year over year. So something to keep an eye out, because if market also feels the same way, this is just noise. We're going to see a snapback in this stock today, or rather pretty quick.
So my second item today, perhaps also the other thing I wanted to talk about is UDAO, symbol DAO. So during our conversation on September 10th, when the stock was beaten down and trading at $25, I said I was flipping from cautious to bullish because forward estimates were looking too conservative relative to how the stock had derated. But right now, this is not working. So I exited the position myself yesterday for a small loss, because especially after that negative price action yesterday on no news, and also after a couple months of the stock going nowhere, it's tested my patience enough. So I'm taking an L here. Now, looking ahead, I still believe consensus numbers are too low. In fact, sell side has gotten even more bearish recently, as shown by the chart that I shared in our internal chat. Like they've been aggressively slashing their estimates for the company since the start of August, and they're now expecting only 1.4 times revenue growth for this year, and they're expecting earnings to further decline by 136%. Now, the main reason why sentiment has been so bad around this stock is because TAL Education missed on both the quarter and guidance when they reported on October 22nd, and then that sort of kept a lid on UDAO shares in sympathy. But I think the market is making a mistake in extrapolating that UDAO is going to report bad numbers because, first of all, UDAO is more of an online course provider, whereas TAL offers a mix of online and offline. And secondly, both companies are pursuing different growth avenues. TAL is in the middle of expanding into lower tier cities and trying to capture growth, whereas UDAO is still a new player that's trying to establish itself in the higher tier cities first. So, like if we look at their last couple conference call, UDAO's management isn't even thinking about lower tier markets yet. So just because TAL missed estimates on a different revenue mix and a different growth strategy doesn't mean UDAO is going to miss. Between TAL Education and New Oriental, I would say that UDAO is more of an upstart for New Oriental. These two are closer in terms of teaching methods. The difference is that UDAO's selling point has been their high-tech devices. And looking at the earnings report of New Oriental, their top and bottom line have no doubt slowed due to all the academic calendar changes. But in terms of signups, their student enrollment grew 13.5% year over year. Now, New Oriental management didn't give a breakdown of higher and lower tier cities, but the CFO said that enrollment is booming across the country for the current quarter, and the strongest growth driver has been K-12 after school tutoring. I think all of this is a solid read for UDAO, which is going to report on November 19th. However, this means that there are still 8 days left until earnings, and so I don't want to risk holding on to the stock while there's still plenty of time between now and earnings for the market to send it even lower. So even though I disagree with the market, I'm not about to stand in its way because there's a lot of technical damage being done right now.
Sometimes the right course of action is to just wait when the technical breakdown is wide and clean in front of us, right? And so that's essentially the bottom line over here, that yesterday, as I've said this many times, when something breaks down on heavy volume, that's just a bad signal, right? And you want to let the course of correction complete, which sometimes could take a couple of days or a couple of weeks, or sometimes the same thing happens on the opposite side when something is breaking out on heavy volume. It usually tends to continue to run for a while until all the accumulation patterns are completely exhausted. That's the same case over here. Yesterday was indeed a very big sell-off in the stock, down 10% on very heavy volume. So I think the best thing is to just let it settle down and tell us exactly where it's going to build a base next time, potentially in the low 20s, maybe even below 20 a little bit, and then we can take another shot at it with a low risk entry at that point. So thanks for the update, Chronicle, and I'm sure clients will appreciate that as well. That's it from us, folks. We'll see you in the chat room shortly.